The president, Jim, on Twitter, Becky just mentioning this, floating the idea of delaying the election, and we saw futures tumble a bit on that.
Right. Well, I think that the shock value of that is maybe better, more, let's say, the bark versus the bite. I think that there's a belief that we could get a much better picture of what the health situation is going to be like in November. So it's a little premature to be able to say what the president's saying. And it's certainly contrary to what he was saying about the idea that we could have a vaccine very, very soon. If we have a vaccine very soon, why do we have to delay the election? And why does it have to be crooked? So I think you can't have them both ways. You can either have the vaccine come out and have a good election, or you must know that the vaccine's not going to come out and you're going to have what he just tweeted. But whatever, it sows chaos, and chaos is bad for the stock market.
Yep. I mean, that said, Jim, we did get some promising vaccine news today out of J&J as they move to human trials in the U.S. and Belgium. The earnings, which we're going to talk a lot about this morning, are basically shaming the analysts, virtually surpassing the entire range of estimates that have been drawn for Q2.
Yeah, I'm so glad you mentioned that, because there's two things that are happening. The numbers are much better, and also a lot of companies are reinstituting guidance, and that was something that a lot of the analysts didn't expect. And it's pretty much across the board that you find that things are better. The market would be up if it weren't for Germany, was down 3%. And then the president, in a very counterintuitive method, which I think he should probably not take away because he doesn't like to immediately contradict himself, but realize that we could have a really good day in the market. We could have gone to all-time highs. It was definitely a poorly timed in terms of how the stock market's doing. And David, you know, he cares tremendously about how the stock market's going to do.
Yeah, it has been a report card for him from the very beginning of his presidency, and he refers to it all the time, far more than any president that certainly we can remember in our memory, in terms of almost on a daily basis as a reflection of whether he is succeeding or not. Guys, you know, regardless of whether there is any substance whatsoever to the claim that mail-in voting could be fraudulent, which most people, in fact, I think is universally said is not the case, this does raise the prospect, at least in some minds, or continues to raise concerns that are already there about a contested election, about what will be a very difficult election day and perhaps even days after that. And I think that is sort of one of the keys here as well. What we may be seeing in terms of some of the reaction of the market, Jim, is just, you know, you've already heard it. Will the outcome be accepted? And in that interview that the president did with Chris Wallace, he didn't say that he necessarily would accept the outcome of the election if it went against him. So this plays into those continued fears that are already in place.
Right. I mean, look, we do remember the contested with Gore, and as that went on, the market was very unsure of itself, but obviously if the president decides he does want to leave the White House, there will be constitutional challenges. The Supreme Court is actually pretty honest about this stuff. They've got a good Supreme Court. It should go there rather quickly. I don't think it's just be up to the president with a tweet to decide when the election is going to happen. And it's not like exactly a broad-based coalition that he is bringing about. The one thing, Carl, that I find interesting is that the president seems to seems to enjoy the notion of no stability. And then he likes to bring stability to the situation after he's sown chaos. It's a constant theme of this presidency, and it's always amazing to me because, you know, you create this level of uncertainty, and then you solve the uncertainty. And it usually takes a full day to solve the uncertainty, and then the market goes down that day.